Hey, Jay Soloff with Investors Alley. This is our options trade of the week. I'm back at Market Chameleon, great site for analysis and screening of option trades. For instance, I'm looking at these option block trades to see what big trades happened on a certain day. So I'm looking at June 28th. Now, I can sort by, let's say quantity and try to find some really big trades that may be interesting, or you can actually narrow down your search and look for certain things. So maybe I'm looking for only calls, for instance. All right, well, what if I want to look for maybe covered calls? Well, actually, buy rights, another name for covered calls, are a certain designation that you can actually search for. So buy right call. So now we're looking at covered calls mostly, and you can see there are quite a few large covered call trades. That's normal. There are generally lots of covered call trades that happen in blocks. A lot of stuff that happens on ETFs, for example. So let's see if we can maybe find something interesting. You can kind of look down. Maybe there's a stock you're interested in or an ETF. And here's a few. Facebook. Here's a Facebook one that goes all the way out to December at the 240 strike. That's interesting. So we have Facebook, which is trading at 192, and this is a covered call trade at the 240 strike all the way out to December. That's kind of interesting. Let's take a closer look at that. So I click and I go to the Facebook page, and right here, this first headline I think kind of explains it all. Facebook has been going up with this Libra situation, which is their basically a cryptocurrency, although it's more like a standard currency almost, and it's been getting a lot of positive vibes, and the stock has gone up. You can look at the stock here in the stock screener as it loads. You can see, let's say look at the last 3 months. You can see since the beginning of June it has gone quite a bit higher. Now the market has gone quite a bit higher, but Facebook, was dealing with some issues, certainly with the privacy issues, but it's still gone up quite a bit. I think that the, this crypto Libra news has been good for it. So, what can we do? Well, you look at that trade and you say, well, covered call is a pretty bullish trade, particularly if it's done up here at the 240 strike. That means by the end of the year, someone is making money all the way up to 240. If they don't think that that's a possibility, then they would probably do the call a lot closer in and collect more in premium, which would be a higher yield. So before I go back to that trade, I just want to show you what I'm talking about here on the options chain. So if we look at December, here's the December. The trade that was done was at the 240. So you can see several thousand traded here. That was part of that covered call. And it was done for $3.30 or somewhere around there. I think it was lower. I think it was about $3.15. We'll go back to the trade in a minute. But you could see, all right, well, let's say you do a 220. Well, you're doubling the premium. So why would you not do 220? Well, because you might think it's going to go all the way higher, and you don't want to cap your gains at 220. You want to cap it at 240. So, that's a very bullish situation. If you're doing a ton of, a bunch of covered calls, which means, thousands upon thousands of shares are being purchased against those calls. We'll look at that in a second. That's a lot of money being spent. So someone's not going to do that, on a whim. So, that's very bullish that this is a trade out to December that goes up to, that gives you the potential to go up to 240. So let's look back at that trade. And this is the trades for the day. And so, again, I sort by quantity. It was one of the bigger trades, so should be pretty near the top. And there it is. So looks like there were some done at 200, and that's a July trade. So that's pretty bullish. I mean, the stock's at 192, so up another $10 in the next month, almost $8. But here, this is the one I was focusing on, 2,350. So that's 235,000 shares that were bought against selling 2,350 calls. collected $740,000, and it was done at 315. So $315 brought in for every call. So that's where you get that 740,000 number. But this was done against stock. So someone spent, you know, it would be millions of dollars, because we're talking about over 200,000 shares at a price of 192, right? So that's a lot of money. So if you're doing that, then why not collect more premium? Maybe collect $7 and just do a 220 strike or something like that. And that's clearly someone believes that there is at least potential for it to go up to 240. And they're still collecting $3, $3.15, which is not a bad yield. Probably just doing some quick math, not quite 2%, prior to the end of the year, which is not bad when you have as much upside potential as this trade allows, all the way up to 240. Plus, if you look at Facebook, it does not have a dividend, so you're getting 2% for about 6 months, where you would be getting nothing just holding the stock. So you're adding a decent, little dividend almost for half the year at 2%. You're giving them the potential to go up all the way to 240 as well. So interesting trade, very bullish on Facebook, and just the sort of thing you can find by going through block screeners and looking at certain types of trades. Now, if you're interested in learning more about covered calls and other sorts of option trades and some of this vocabulary I may have been using, I talk all about this stuff, and there's a whole unit on covered calls, in fact, in my Options Trading Mastery. It's a course or several courses where I talk about different option subjects and different strategies. So if you click on the link, that will give you more information about that.